Hello everyone and welcome to the FinTech Finance Virtual Arena. Today we're going to be talking about how lending solutions are transforming the way that SMEs can get back on track after a pretty difficult couple of years. And joining me, I have Julita Lange from Ezbob. Julita, how are you doing here today?
Very good. Thank you very much, Doug. Thank you for having me today.
Well, absolutely. Thank you very much for taking part. And with that, I think the best way to kick things off is if you could tell our audience a bit about yourself, Ezbob, and your role there, actually, please.
Of course. I'm a director of market strategy at Ezbob, and I come from a background of more than 15 years of combined sales, business development, market strategy, and consulting experience across different software products, including enterprise risk management and credit origination. I joined Ezbob last year, and I can tell you it's been an amazing journey to join a very dynamic, very interesting fintech company, helping SMEs get quicker access to capital these days.
That's absolutely brilliant. And it is so important in this day and age. So thank you very much for taking the time to join us here today. So with that in mind, I always like to start these sessions off by kind of looking at the before times, if I will. So Ezbob have been around, from my notes, from about 2011. Yes. And I think it's fair to say that fintech was kind of kicking off back then. So from your perspective, what do you think that the lending situation was like back in 2011 for SMEs?
Absolutely. It's really important to note that back when Ezbob was established, we had the very much lending 1.0 type of circumstances. So the process would be very much paper-based. It would expect that as an owner, as a director of an SME, you had to go to the branch or visit your relationship manager or a bank branch manager in order to apply for a loan, and also to explain your current situation and justify why you need a loan. And then subsequently, the process would actually take days to submit the relevant information, to get a review, to get the decision. And then from the decision, it would take another couple of days to actually get the money. And what we realized is that technology can facilitate an acceleration of that process and cut out manual labor, manual effort that is conducted behind the scenes. Against that backdrop, Ezbob was a pioneer when it comes to digital lending, a lending that doesn't require a face-to-face interaction. Back when we used to be a lender, our slogan was, come to us, apply fully digitally within minutes, get an instant decision, and get the money the same day. So we were one of the first ones really venturing into digital lending that can be provided very quickly, very smoothly, and give access to the required capital to SMEs as and when they really needed it. Since then, that market strategy, that business model has been implemented by many banks and alternative lenders. So today it's almost taken as granted that you can interact with financial institutions using digital channel, but I do believe that there is still a room for improvement.
Yeah, it's almost absurd to think that this wasn't almost a product offered by the banks before 2011, really. So with that in mind, we've heard about how Ezbob were first on the scene effectively, but you've kind of changed from being a lender to kind of creating a lending as a service provider for other organizations. So do you think that having that heritage of being a lender before, knowing the pitfalls there, has given Ezbob an insight into how lending should be done going into the future?
Certainly, and that I believe is something that makes Ezbob quite a unique fintech provider, because we do share those best practices and knowledge as part of the overall technology implementation. And I guess I would want to point out a couple of tips, a couple of best practices that I think are absolutely core when it comes to lending to SMEs, especially digital lending. In this day and age, it is expected that the user experience that accompanies an application process is sleek, quick. It takes minutes, it can be intuitive. I think we are all very much used to the types of experiences delivered by the likes of Netflix and Amazon when things are proposed to you. They are there just under finger tip. And we see that if banking institutions, financial institutions follow that sort of philosophy, they really succeed in digital lending. And I wanted to share a few tips that we typically talk about when working with financial institutions embarking upon a digital transformation. When it comes to user experience, make it absolutely quick. We are very much proponents of completing an application for a loan within the space of 10 to 20 questions. There was last year a very interesting study conducted by a company called Built for Mars that actually tracked how many clicks it takes to open a bank account or apply for a loan. And you could see the results of that study ranging anywhere from 26 clicks to 99 clicks. I think 99 clicks is very extreme, but you can see that this measure of clicks and minutes that it takes to apply now becomes part of a KPI, part of the DNA when it comes to a setup of a lending process. One other point to add is that, again, going back to the Netflixes and Amazons of this world, we are all used to, as users, used to the instant gratification. Tell me very quickly, what am I getting here and if I'm actually getting a loan. So as part of our best practices, we always recommend to design the application form for a loan in such a way that will give you a quick indication of either a quote or an indicative pricing so that you can keep on engaging your applicant throughout the application process. And the way we recommend to structure the application process is also to move very easy and quick questions to the front part of the application, give the so-called carrot, so that could be a quick quote, and then move the more intrusive, more challenging questions, for example, such as details about your directors and shareholders, to the latter part of the process. And that gives an incentive to the applicants to really complete and submit fully the application for a loan. One last point to make is that depending on your appetite as a banking institution in terms of the target audience, you may consider as part of that user experience to include some really agile, really modern steps. For example, rather than sending a passport photo or your documents via PDF, why not include in your application journey taking a selfie as part of that process? That certainly appeals to the younger generation. We see a lot of sole traders, a lot of smaller owners of SMEs, really appealing to that type of application process where they can take a selfie and a photo of the passport process. So if I was to summarize the heritage and the background of us as being a lender, we definitely recommend banking institutions to focus on user experience and on the client first. The rest will follow.
It's really interesting hearing that, how the changes really become very customer focused. The experience is almost the product itself. So with that in mind then, is that the reason why maybe the traditional banks have been quite lethargic when it comes to improving SME lending? Because it's not a big money spinner for them typically, or at least it could have been, but they just didn't realize that it was just customer experience that needed to change, not the product.
That's such a good point. I do believe, though, that very large banking institutions are awakening to the fact that they need to be digital, that the lending process, especially for SMEs, need to be done through a digital channel in a very quick way. There was a very interesting study published last year by Forrester, the State of Digital Transformation, and in that study, Forrester team interviewed institutions across the UK, and 86% of them admitted that they see the digital lending, digital transformation as a way of staying ahead of competition. I think even large institutions recognize that without a digital channel, they will be really behind. And also the quality of that digital channel really matters and can help them really differentiate themselves against competition in the market. And going back to the point why we see maybe less of digital innovation from very large institutions, I think in our experience of working with very large banks such as Santander or Intesa Sanpaolo, we see that they're certainly very much aware of digital transformation and the need for it. But given the size of those institutions, and also given the number of stakeholders that they need to include in such a project, it's just taking time. If you're such a large institution undergoing a digital transformation, you really need to focus not only about the user experience, but also about the process that will follow behind. It's a major transformation, and not everyone likes change. So it takes time to get everyone comfortable and get everyone on board. There was another very interesting study published by BCG last year in which they've interviewed banking institutions across Europe. And it's interesting that 26% of respondents noted that they feel they are constantly in a digital transformation state. And I think that is probably the best description for the larger, more traditional banks. They started their digital journey, they're somewhere there, but the goalpost on what they want to achieve actually keeps on moving. Under the pressure of challenger banks, they keep on coming up with new features, new functionalities. So the traditional banks are constantly playing up the catching up game almost in that respect.
Yeah, they've suddenly realized they've had to be almost tech providers rather than just banks. And I think that digital transformation strategy to kind of create a waterfall approach rather than a legacy approach of every 20 years changing your digital solutions, that's going to change. We've already seen that change. But with that in mind then, with alternative lending and finance becoming more mainstream as a result of this digital transformation, I want to throw it back to Ezbob and find out what you can do in this new paradigm.
A very good question, Doug. It's actually something that we quite openly talk about, that Ezbob's platform helps democratize the access to technology. It is a way for the well-established institutions and some of the more traditional banks to accelerate their digital transformation. Typically in the past, those large institutions would undertake a digital transformation or a revisit of their lending process themselves. They would try to do it with their own IT resources, and therefore it will take them a long time. Whilst using a solution such as Ezbob, by us being very much an off-the-shelf type of solution, very easily configurable, you can really be up and running within a space of weeks and see how you can use and leverage that digital channel to promote it to your clients. And we can see that through the works of with some of the smaller banking institutions, that they actually decide to outsource that technology to an external vendor, precisely as you pointed out, Doug, that banks are not expected to be technology houses. They're expected to serve customers with capital and financial products. So there is more and more of very successful fintech and banking partnerships out there when the banks focus on their part of the responsibilities and fintechs come in to fill that technology gap.
Interesting hearing about that partnership and ecosystem kind of forum that fintech has created. Now, if I was to be cynical, I mean, one pillar of institution that is often considered to be slow to change is maybe the government's response to emergencies like this. But in the UK, we've seen quite a huge amount of development, or at least support given to SMEs via the national interest. So with that in mind, how is that going to change SME lending going into the future and the industry itself?
Indeed, the government, the UK government and British Business Bank has orchestrated an immense support for the SMEs in the UK, with over 70 billion pounds lent year to date since the beginning of the programs. Both CBILS and BIBLS have facilitated huge amount of support for SMEs. And I want to acknowledge that actually the changes of the government programs are really far-reaching, and I think it still remains to be seen what the real impact is going to be. What we've seen over the last 12 months, it's certainly a huge shift in demand towards government-sponsored, government-supported programs. So that means a huge shift towards unsecured, working capital type of lending. And as a consequence, we've seen a significant drop in secured type of lending by more than 20 billion over the last 12 months. And what we've also seen is a level of polarization between institutions that have been accredited by the British Business Bank to become part of the government program, and those that actually have not been successful. We've seen that SMEs quite naturally leaned towards banks that were providing the government-sponsored lending versus perhaps their traditional banks that didn't manage to get accredited. But as a consequence of that, also for the institutions that did not participate in the government program, we've seen from them very much a creative type of response. We've seen a lot of product innovation. So they would come up with new types of products with perhaps payment holidays embedded or late payment fees forgone to almost imitate the government style of loans. So I think it remains really to be seen what will be the consequence. Certainly a very quick and very positive response from the government, really praising the access to the capital that was very much needed by many SMEs in several industries in the UK.
That's really interesting to hear, especially from your perspective at Ezbob. And with that in mind, then, if we were to apply that across every different vertical, effectively, digital transformation has been shifted because of the pandemic. And from what you've told me about how we've seen SME lenders kind of almost piggyback off some brilliant innovations from the government, what do you think in the future we're going to see for SME lending from fintechs going forward?
Absolutely. So I think the shift towards digital has driven a lot of SMEs' expectations, I would say, because now that they don't have to go to the branch and they can use a digital channel, they assume that this digital channel is going to stay. It also shifted SMEs' expectations in terms of how quickly they can get to money. They expect it now, they expect it today. I think going forward, what we start to see is a lot less of reliance on traditional data sets. The COVID and pandemic has proven that for banks with a traditional approach to credit assessment, they can no longer rely on just financial statements data. They need to have access to more transactional and behavioral type of data to really assess the creditworthiness of an SME. If as an SME you've been impacted by COVID, you may report in your accounts a significant drop in revenues, but there may be other factors that will still be good markers of your good performance, and on the basis of which we could give you a loan, but you have to be able to take those into account. What we see is the power of a platform such as Ezbob is the ability to gather more than 3,000 data points from many data sources, from e-commerce, from tax authorities, from accounting services, to really build that 360-degree view of an SME as an applicant. And I do very much see this as the future of SME lending. Stop the reliance on only traditional data sources and to be more encompassing and more comprehensive. One other point that I would like to add is another shift that we see in the market is the presence and the availability of funding at the point of sale. The term that has been recently coined by the industry is called embedded finance. So rather than for an SME to go to a bank and apply for a loan and use a different institution to facilitate that funding, more and more SMEs expect the funding being available in their natural marketplace, in their point of sale place. So for example, through the work that we have done with PayPal, we can offer financing for merchants using PayPal within their shop. So it's then and there as and when they need it. So we see this convergence of different point of sales, marketplaces, e-commerce places, also acting as financing institutions rather than banks. So if I was to point out the two key trends that we see over the next couple of years, reliance on a much greater variety of data sources combined with that point of sale, that then and there type of financing available to SMEs that need capital.
Well, I think they're two huge points. I think embedded finance is going to change the way that people view money as a whole. I know that sounds almost a grandiose statement, but it really is so far reaching. And of course, improving the data sets can just open up finances that maybe financial services that people hadn't had access to for thousands of years. And I almost feel absurd again saying that, but it is actually a big enough innovation that is actually going to change finance to that degree. So I'm really, really excited for the future of lending. And I think whereas maybe if payments were the kind of forefront of the fintech revolution in the noughties, maybe this generation will see fintech lending take the center stage. So Julita, thank you so much for joining us here today. I hope you've had a good time, and thank you very much for your insight as well.
Thank you, Doug.
Brilliant. Well, thank you, Julita, and thank you to all our viewers. You can catch the rest of the series and much more over at www.fintechf.com and, of course, YouTube and LinkedIn. Thank you very much. Goodbye.